trading just got harder. And most traders are not going to survive in 2026 unless you get with the program. Because if you fall behind, you're going to get left behind. I've been doing this for 34 years and I've seen markets evolve. I've seen systems change, but strategies always remain. The business plan always remains, and we're going to talk about the business plan at the end of this video. But first, I'll show you a system that'll actually help you in this turmoil of a market. This market is a turmoil of a market, as I always say. For those of you who don't know me, I'm Rob. For those of you who do know me, I'm still Rob, and it's coffee with Rob. But first, I'm going to take you to the charts. I'm going to show you the system that might work for you. But what you have to understand is that markets are 50-50. No matter what you do, markets are 50-50. And I know most of you are going to disagree with that. And I'm going to get a lot of flack for that because you haven't quite worked it out yet. One day you'll get the aha moment and you'll figure it out. And you'll go, actually, you know what? Markets are 50-50 and you have to manage the risk. But until that time, just understand that they are. And if you don't like my videos and you don't like what I'm saying, then just go and watch someone else. I suppose it's okay, but stick around and see what you can find out. See if there's something here that'll actually work out for you, because I will show you on the charts now how we trade a system. And then after the charts, I am going to take you and I am going to talk about the strategy that's going to make you the money. But if you don't evolve soon, you are going to get left behind, because markets are an evolving thing. You can't just stick to the one way and then hope that it's going to work out for you, because in many cases, it's not going to work out for you, for the simple reason that somebody's going to tweet something and the consistency goes away and everything changes. And what we need in the markets is that consistency from those charts. We need to look at those charts and say what happened in the past is going to happen again in the future. That's what we use the charts for. But to actually trade and make money, you don't even need a system. You don't even need indicators on the chart. All you need to understand is the markets are 50-50, and effectively you need to make more on your wins and lose less on your losses. That's what I'm going to show you today. And that's as simple as it gets. Let's go and have a look at the charts and then we'll take it from there. There's a reason trading got harder. And the one thing you have to understand, that trading is risky. Most traders do lose money. And if you don't like losing money and you don't like risk, you probably shouldn't be trading. You know, 75% of traders actually lose money. It's quite an insane statistic if you think about it. The problem we have, I mean, you look at this S&P 500, if I was to go back in time on it, it really does get a bit out of hand when you start seeing the amount of times it's gone up and down. But over the period, if you look at it, it's kind of just gone straight up. Now, the way that I look at this is this market has just gone from the bottom and it's just gone up, gone up, gone up, gone up, gone up, gone up. So over the last period, what I would say is all the new traders that have got into trading have just only seen the markets going up. They haven't actually seen a market turn around, go down, and take all their money. And that is a danger in the markets at the moment. The other danger I see in the markets at the moment is when we look at charts, we look for patterns and we look for what's happened in the past will in all likely happen again in the future. We look at what happened in the past and we say there's a trend that's trending down, so we draw a trend line in, we work beyond that trend line, it bounces off that trend line, goes down, it's bearish, it breaks through and goes up, it's bullish. I've shown you all this in my previous videos. If you don't know this, go back and watch my previous videos. I've given you the systems. There's the resistance line. Resistance line consists of a number of touches. It's a liquidity area. There's a support line. It's an area where it keeps bouncing off the bottom. That's an area of liquidity. It's an area where there's money. That's why it bounces. The trends are areas where every time it gets to a certain point, it comes down, because you're trading against human beings, and all the human beings are thinking the same way as you. That's why it works that way. The problem I'm seeing in the markets is rather simple, and that is you've got people like the US government which are making rash decisions, which are making decisions that change on a daily basis, so this consistency goes away. But when I say that, I must say that the consistency, if I look at the overall period, has been pretty standard. So I don't use indicators. I don't use all these moving average crossovers. I don't use these Ichimoku systems, Fibonacci's, or anything like that. Although I do have videos in my system that show you how to use them, I don't use them myself anymore. I have used them in the past in my career. In the 34 years that I've been trading, I've used everything. I also spent my time watching videos, looking for the next best shiny thing. Everybody does. what I realized is that the market does evolve and things do change with different governments in charge, with different things happening in the world. But the one thing that never changes is price action. Price action, what it does is what you're doing when you're trading with charts. Remember, win rates don't make you money. Remember, charts don't make you money. Remember, these charts don't predict the future. What they do is they give you the ability to manage your trade. So what you're looking for is you're looking for resistance areas, you're looking for support areas, you're looking for trends. It's not a train smash. It's not complicated. Even if you're trading with Bitcoin, where did I put Bitcoin? There's Bitcoin. At the moment, in the past, it's been very, very, very bullish. It went all the way up, went up to 125,000, turned around, came down. At that point, everyone was calling for Bitcoin to go to 200,000, perhaps even a million. Everyone was buying Ethereum as well, and all the others. There's a thing called Fartcoin these days, which is quite interesting as well. Anyway, now it's gone bearish. You know, if you look at the bearish side of it, there she goes, she's coming down. Now everybody in the market fundamentally is saying, it's going down, it's going to go to 70,000, it's going to go to 50,000. Is this the end for crypto? Is it falling down? Is this what's going to happen to crypto next? So you're going to get all these questions based on crypto going down now. So I've drawn in a level here of a resistance level, a liquidity level, and I've drawn in a support level at the bottom where it could go to. I predicted about 73,000 for where it to go down to. It's hitting a trend resistance at the moment. It'll probably fall a bit further. I went long on this and it came down, so I actually dumped out the trade now, and I'm waiting to see how far it'll go down. If it goes up and breaks to the upside, I will buy it. Remember, breakout trades are great. So if it breaks through that trend resistance and goes to the upside, then it'll be a nice long trade. The nice thing about price action is price action never changes. In other words, no matter how much the market changes, and the one difficulty we're finding in the markets with all the hype that's going on in the markets and all the movement is you get into a trade, you get into a trend, you go bullish, and you're trading with the trend. And then somebody tweets something or says something silly or says they're going to put tariffs in or whatever the case, and the market turns around. So you get these ups and downs. But what you have to understand about a market is it goes up, goes down, goes up, goes down, goes up, goes down, goes up, goes down. It's called volatility. Markets will always have volatility. They do not go up in straight lines. They can't. If they do, that's called a lamp pole formation, and the lamp poles normally fall over. So don't expect these markets to go up in straight lines. They don't. So when I say trading just got harder and you're going to struggle in 2026, I don't mean you're actually going to struggle. You are going to struggle if you are using systems that are, let's say, a little bit antiquated, lagging systems or these old systems. They'll still work. It's really important to keep it simple. Keep it as simple as possible. Don't get overcomplicated. Keep your ear to the ground. Keep watching what's happening in the markets. Don't get caught up in all the news and all the mess and all the rest of it. What I do is I ignore the weekly news, you know, the jobs figures, the non-farm figures and that sort of stuff. I keep my ear to the ground, but I don't let it bother me. I look for the bigger news items, the more important information. And then I follow the money. I look for the liquidity areas and I follow the liquidity areas. So trend is your friend, the range, and of course breakout trading. And that's as simple as it gets, guys. We do breakout trading. We follow the breakouts. Simple, really. If you've got a trend and it breaks out of the trend, that's a great one. If you've got a support and it breaks through the support or resistance, that's a great trade. Then you've got a trade. Here's the Euro, Great British Pound, for example, at the moment. There, it's broken through a level. It's broken to the upside. It's breaking up, but it's breaking up inside the trend. So you can use that to your advantage. It's going to give you all that distance. The big thing is, if you're trading in the markets as volatile as they are at the moment, you've got to be very careful not to be trading in 1 minute trades, 5 minute trades, because it's too volatile for that. It's better to be trading. We're trading in 4 hour here. You can trade in the day. This is a day. You can trade in the H4. You can trade in a 4 hour. A 4 hour trade is good, and that'll keep you in the markets as well. Don't get caught up in trading 5 minute and 1 minute trades. 99% of traders do lose there, and it becomes more complicated. But the system is easy. The system is straightforward. If you want to know more about the systems, go and look at my other videos on the channel, which go into detail about how to trade with the price action system. Follow that. It's easy, it's simple, and you'll stay in the game. Don't get caught up in all the new stuff and the trends and, the way the markets are evolving. The markets are evolving. But if you stay with price action and you follow the strategy that I'm going to give you now after the charts, then you will be able to stay in the game. So just follow that strategy. Let's go and have a look at the strategy, and then we'll take it from there. There you go. Now you've seen the charts. Now you know how on the charts you can use it as a system. But the system doesn't make you money. Win rates don't make you money, and the market is 50-50. It's like the toss of a coin. If I toss a coin 10 times, 5 times it'll land on heads, 5 times it'll land on tails. But if I gave you 2 for every heads, you'd be happy about that now, wouldn't you? If you chose heads anyway. That's how the market works. You can't tell me that the market's not 50-50 when you're dealing in a market that's made up of buyers and sellers. And all the buyers think that it's a buy and all the sellers think that it's a sell. That's how markets are made up. If the market was only a buy and everybody believed it was a buy, then surely there wouldn't be a market, because everyone would just be buying, and who they're going to buy from. Everything will just be on a zero, wouldn't it? Somebody's got to want to sell something for you to want to buy something. That makes the market 50-50 on its own principle. But also on the principle of a chart, if you're taking a trade on a chart, there's always a 50% chance that it could go pear-shaped and you could lose. And the first thing you have to learn in the markets is how to lose. Really important to learn how to lose, not learn how to win. Winning is the easy part. Losing is the part that you have to get around. Losing is the part that you have to beat the difficulty on. Now, how do you do that? What strategy do we use so that we don't struggle with losing, so that we actually understand losing, and that what we find our threshold is in losing, and we sleep at night so we don't lose money in the markets? Well, it's simple, really. All you have to do is have a business plan. Now, if you were to start any business, surely you would want to have a business plan. You wouldn't just go and start a business now, would you? Well, some of you might. But most of you would want to know how much capital you're going to need. Most of you want to know where it's going to be, what it's going to be about. Now, the funny thing about trading is people get into the trading and they think that I can take $1,000 and I'm going to make $10,000 a month with it because some guru told them that. I don't know. Like I said, if you don't like watching my videos and you don't like the 50-50 principle and you don't like the fact that I'm telling you that you might lose in the market, then perhaps you'll want to go and watch that guy with a Lamborghini that's telling you can turn $1,000 into $100,000. But you won't. Thing is, where can you take your money and double it? Where can you take $1,000 and turn it into $2,000 this year? Not even the stock market. There is no way that you can do that. But for some reason or another, you actually believe that you can take $1,000 and turn it into $1 million overnight. Now, I don't say that you can't take $1,000 and grow it. Of course you can. You can take $1,000 and grow it. I saw someone in the market say, all you got to do is wait for the markets to go down and crash and get to the bottom, and then you can take your $1,000, throw it in there, and it'll just grow to gargantuan amounts. And I thought, why didn't I think of that? That's amazing. Well, off you go and try that. Go and see if you can find the bottom, see if you can pick the bottom, see if you can get your $1,000 in at the bottom of the market and turn it into something huge. And call me when you do, because I want to do the same. I want to take all my money and throw it in at the bottom of the market and try and make all that profit on the way up, because I'm sure it's a great way to make money. It sounds good to me. No. And if you want to trade, you're going to need a proper strategy. The only way you can do it is with a proper plan. Now, what I do is I manage the risk, and I try and make more on the wins than I lose on the losses. And that's the principle of it. But how do I work this principle? Well, it's simple, really. If you have a $100,000 account, let's say you've got $100,000 to trade with. It's not $1,000 that you're going to try and turn into $1 million. Let's say you've actually got a capital amount of $100,000 that you want to trade with, and you want to make some money with this $100,000. If you risk 10% per trade on leverage trading, and you lose 10 trades in a row, you're going to lose your whole account. In fact, if you lose 7 trades, you'll be $70,000 down, and you'll be looking with $30,000 left, 30% of your account. Would you be able to handle that? Is this something you would be able to work with? How would your heart start beating? Would you be able to sleep at night? You're going to start making mistakes. You're going to start taking risks unnecessary risks that you shouldn't be taking if you're that far down. If it's your last $100,000, I'm not saying if it's a small percentage of your overall $1 billion wealth, that's different. But for most people, it's all they have. It might be their pension, might be their payout from work, it might be their savings. I don't know. but it might be the last money you have and you've decided to go into trading, and now you're taking on trading with this last money.
Spend every last cent.
And if you lose it, you lose everything. So the most important thing for you should be managing that risk, managing that money and making sure you don't lose it. So what I do is I risk 1% per trade. And I also spread my wealth across different brokers. Why do I do that? Well, you could wake up on Monday morning one day and the broker says so long on all the fish, because that happens. They're not banks. But better than that, if you don't have a large sum of money, you're probably going to need to use one broker. And then when you grow it, you can start splitting that up. But in the beginning, that's how it is. So let's say you've got your $100,000. It's in the one broker and you risk the 1% per trade. Now, if you lose 10 trades, you only lose $10,000. That's 10% of your account. You're still in the game. You've still got 90% of your account to work with. So you're okay. Also, keep the figure that you're working with the same. So what you're doing is you're risking $1,000 per trade with a view to trying to make at least $2,000, $3,000, $4,000 on the same trade. In other words, you want to make a profit on the trade, not a loss. You don't want to risk $1,000 to make $100. You want to risk $1,000 to make $1,100, $1,500, $2,000, $3,000. I could go on and on and on. I think you get the picture. Well, you should. Now, the idea is you look at the trade and you say, where would this trade be invalid? If I look at this trade, where is this trade invalid? Where is this trade no more? That's where you want to put your stop loss. You put it in an invalidation area. Then you work out the size of your trade. From there, back up to the cost. Now you know the size of your trade. And then you work out if you take that trade, how much profit can it make you? Will it be able to make me more than $1,000? That's all I care about. That's the trade. That's as simple as it gets. Then all I have to do is manage the trade. And the best way to do that is to follow it up with a trailing stop. Don't just click out when you see profit. When it gets up into a decent profit, move your stop losses up, follow the trade up. You will end up with a whole bunch of small wins because your stop loss got taken out on a trailing stop or whatever the case.
Run it on my card.
But at least you are trying to target those bigger wins at the end of the day. And that's what you're aiming for. You're aiming for those bigger wins and taking smaller losses. If you lose $1,000, if you take 10 trades and you lose, let's say you lose 6 trades, that's $6,000 gone. And then one trade, you win $3,000. Another one, you win $3,000. Two trades, you got all your money back. The third trade could just be pure profit if you win. If you win 4 trades out of the 10, you're in the pound seats. There was a group of traders called Turtle Traders many years ago that used the breakout trading strategy that literally won 20% of their trades. And they were the most successful traders on the street because they would follow those wins to the moon and they would make so much money out of those trades. Hey, while you're here, don't forget, join the members area where I've got a trade of the day every day for you. And if you've watched the video this far, at least subscribe. By the way, there is a free Forex book in the description as well as in the top comment. I'll always leave it there for you as well. If you want that, go and grab it. Go and enjoy it. It's there for you. It's a bit of fun. Join us for the live shows every Tuesday and Thursday where we get together as a group and we discuss trades and questions are asked and I answer them when we go back and forth a little bit on the trading. Because there is a lot of questions surrounding my policy of 50-50. Most people comment that that's impossible because they believe in a win rate, and you should never believe in a win rate. Win rate cannot make you money. How can a win rate make you money? It's impossible for a win rate to make you money. What you need is a profit, not a win rate. I can have a huge win rate. I can win 9 trades out of 10, win $90 and lose $1,000 on the 10th trade. Doesn't mean I'm winning, does it? So win rates don't make you money. That's just something for you to have an ego about and boast about. You have to understand that the stock market, the crypto market, the Forex market, the markets that you are trading is all about psychology. It's all about fear. It's all about FOMO, the fear of missing out. And it's all about patience, waiting for the trades to come to you. Really important that you wait for the trades to come to you. Don't chase trades. Don't chase the trades. And the more you start taking pain and the more you start losing, the fear will kick in and you'll start taking risks to get that money back. And that's when it gets worse and it gets worse and it gets worse. A lot of traders, what they tend to do in the beginning, we've all made these mistakes and you'll all will make these mistakes. We've all dollar cost averaged. We've all tried to move our stop losses. We've all tried to follow the losses down. You got to turn that mindset around and follow your wins up. Get out of the losses. Dump the losses as soon as you can. If you dump the losses early, that's acceptable. If you dump the wins early, not so much. That's as simple as it gets. And on that note, guys, I want to thank you for watching. I hope this video has somehow helped you. If it hasn't, if you didn't like my video and you found it kind of like, oh, what's that? And it wasn't really worth anything to me, then you probably want to be watching one of those guys with the Lamborghinis and the Ferraris, and you're probably looking for someone that's going to tell you that you're going to make gargantuan sums of money in the market and it's going to be easy, rather than watching some old oak like me who's just trying to tell you that trading in the market is not as simple as it seems, that you're not just going to make money falling out the sky, you're not going to drive a Lamborghini tomorrow, and it's going to take you a long time to learn the game, and you're going to take losses. Ooh, you don't want to hear that. And if you didn't want to hear that, then you're probably going to be upset with me. And you're probably going to say, that's not true, because you don't want to believe it, number one. And you're going to want to watch those guys that are telling you that the money's just falling out the sky. Guys, if someone tells you they made $150,000 today on the market, understand this one simple thing, one small thing. And I'm not going to tell you they're lying, because they're not. They're telling you the truth maybe. But what they're not telling you is they've got a $500,000 account or $1 million account that they're working with. So yeah, they can lose a $70,000 trade. Yes, they can win a $150,000 trade because they've got a capital amount in the account, which you might not have. So don't think that you're going to go get involved in trading with your $1,000 and make the same money as that guy who's boasting to you that he made $150,000 because he's got a capital account. Did you notice the Lamborghini, the Porsche, the Ferrari that he was showing you? Yeah, did you notice that? Okay. Whether they're telling you the truth or not, that's the basis of it that you have to understand. That money doesn't fall out the sky. On that note, thanks for watching. Don't forget to like, comment, and subscribe. It's been fun having you here again. Join us for the live shows on Tuesday and Thursday. Watch those last videos so you can get more on the strategy. The strategy is more important than the system. Till next time, guys. Thanks for watching. Cheers. Ciao. And bye.